The global economy is in a fix right now. Governments are trying hard to stabilize the failing financial systems, while some governments are honestly working for the financial and security of their citizens. There are others who are just trying to manipulate them. There have been a number of new rules and regulations in the US economy, most of which are aimed to benefit the government and the Fed. Citizens are not given the proper knowledge and detailed information about these rules and regulations. Most of them benefit the business giants and big banks, but they are crushing the small businesses and middle class citizens. One of these is bail ins. Neil McCoy explained the bail in detail. He raised the concern over the things that it can worsen. Talking about what are the bail ins at the first place, Neil says that you are probably familiar with bank bailouts. From the 2008 crisis and recession that emerged, where the government used taxpayers' money to bail out the banks, which became as one of the biggest scandals in modern history. So a bank bail-in then is where the bank can legally take possession of your savings or your deposits and turn it into worthless banking stock. And to your shock, this is 100% legal. The USA actually passed a law in 2010 called as statutory bail-ins, which includes extended powers to the Federal Reserve, the Securities and Exchange Commission, and the Federal Deposit Insurance Corporation, otherwise known as the FDIC, whereby bank holding companies and non-banking holding companies can be placed in receivership under the control of the FDIC. The IMF then produced a paper on the 24th of April 2012, which was all about the bail-ins. This paper, published on the 24th of April 2012, where a new plan was created for solving banking crisis. Now Neil MacCoy says, we had the first bail-in, which took place in Cyprus in March of 2013. The bank basically bailed in 21,000 savers who had more than 100,000 euros in their bank accounts. So these depositors here saw roughly 50% of their savings converted to equity, making them 81% share owners of an insolvent bank. In other words, they got scammed. Now you must be thinking, how is this illegal? Look, when you deposit money into a bank, that money is considered a deposit. Technically and legally, this deposit then becomes the ownership of the bank, where they issue you a promissory note or you have made a loan to them, for which they also give you interest. If you are receiving any interest on the money that you have deposited, that is concerned an unsecured loan from you to the bank. So after the success of the bail-in Cyprus in 2013, bail-in laws passed pretty much everywhere where we have modern banking system. In Europe, the Bank Recovery and Resolution Directive (BRRD) was introduced in 2014 across the then Europe 28. This policy included a bail-in mechanism, which they stated aims to ensure that bank shareholders or creditors, including uninsured depositors, pay their share of cost. The bail-in was institutionalized in November of 2014 when the group of 20 nations, G20 including the United States, approved its use through the Financial Stability Board, the FSB. FSB permitted the priority of the payment of bank derivatives above all other creditors. Around $650 trillion exist in the derivatives market, and what this policy says is that when the derivatives market pops, and it will, the banks and the financial gamblers get paid out before you do. So in effect with bail-in, they don't steal your money because what they do is they convert it into assets. The IMF conducted a debt sustainability analysis and they figured out that there was no way that Cyprus could have possibly bailed out the banks because the debt holdings were over 50% of the country's total GDP. So they said that bail-in was the only option and quite convenient. It came 11 months after that paper and they didn't have a test case yet. When the people that were bailed in went to the courts for justice over this, the courts sided with the banks. Now Neil expresses concern and says that if the whole sector, the banking sector, collapsed, there is absolutely no way that you are going to get all of your money back. Just look at what happened in the 2008 crisis. In the USA alone, 1200 banks almost collapsed. They had to go to the FDC for help. The FDC didn't have the money, so they had to go to the Treasury for the assistance. Neil warns that if you are with a big bank, any large commercial bank, then it's probably high risk. If you are still not sure, just look if your bank makes businesses loan and mortgages. If they make business loans, look at the business sector right now. Is it healthy or are businesses collapsing on a day-by-day basis? So what's holding it all up is probably the mortgage market. Property prices are booming. They are exploding right now because of all this new liquidity being created, pumped into the market or any central bank around the world. It is the same scenario at play. If your bank calls you and says that they would like to transfer your savings into bank bonds, that's one red flag right there. If you have money in the bank, check the terms and conditions. Speak to the bank to find out what their rules are right now. The banking sector is too big to fail. They will not be bailed out with taxpayer money. Next time, they will be bailed out with the savers' money. And the closer we get to negative interest rates, the more likely this is to occur. So what can you do to protect yourself then? Answering this question, Neil says, well, first and foremost, definitely diversify your cash. If it's in one big bank, get it out of that immediately and move it into some smaller banks. What happened during the Great Depression? We are seeing a lot of the same patterns happening today. If you are saving money right now in the bank, you are already losing your capital every single month in terms of purchasing power. This is because every time the bank creates more currency, which is where they print inflation into the monetary supply, they actually weaken the value of the currency already in existence. And this is inflation in plain sight. So guys, tell me in the comment section below, what do you think? Should you save your money in the bank or not? Also, if you found this video really knowledgeable, then please make sure to press that like button, make it blue, subscribe to our channel. I'll see you in my next video. Till then, have a great day.